in our financial series. And this is one of a series of events that we host. We will be recording this event, so if you ask questions and comments, which we're going to leave the mics open because we've got a smaller group, so you're welcome to ask questions as you go along. And we'd also ask that if you follow the Maryland Innovation Center on Eventbrite, so you'll see notifications of future and upcoming events. If you prefer to ask questions in the chat box, please do so. I'll monitor that and I'll ask them at the appropriate time. With this, I'd like to turn it over to Doug White, the host of the series, and he'll introduce the program and our presenter for today. Doug?
Thank you, Doug. And welcome everybody. Thanks for joining the webinar. We're really happy that Kathy agreed to do this webinar today. We felt, or Kathy felt, that since incurred cost submissions are due June 30th, this would be a good topic for June, but Kathy is a wealth of knowledge, and so we hope to have her on other topics for government contractors as we move along here. Just a little bit to introduce Kathy, that she's a managing director and co-founder of KGRF Inc., which provides controller and CFO outsourcing to small and mid-sized government contractors. She has more than 20 years of accounting experience, including 15 years or over 15 years of government contractors, and specializes in financial compliance solutions for government contractors and assisting clients in the use of Deltek, GCS Premier, Time and Expense, QuickBooks, and Uninet software. Kathy has served in financial management positions with several regional federal contractors and has extensive experience in the management of accounting and finance functions. She has comprehensive knowledge and understanding of all complexities of accounting for this unique market. Kathy earned her Bachelor of Science in Accounting from the University of Maryland. Go Terps. And she has an MBA in finance concentration from Loyola College, and she's also a certified public accountant. And if I could just add, we have found Kathy invaluable resource both to our clients, our government contractor clients, and to our firm as we have questions. And if anyone has questions, I know Kathy will be willing to help. She's a resource to anyone who uses her. And with that, I want to turn it over to Kathy.
Thank you very much, Doug. I appreciate all the kind words, for sure. Thank you all for joining today. We will be talking about incurred cost submissions, and somewhat of a timely topic if you are someone that is subject to submitting one, because, well, the time is upon us, and it's time to start getting those things configured. So without further ado, as Doug did such a nice job of introducing me, here's a much younger picture of me. Maybe I still look like that. I'm hoping I do, and some information about me as well. So today what I want to cover is, there's so much to talk about as far as incurred cost submissions are concerned. There's a lot of schedules that need to be completed. There's a lot of different ways things can be analyzed and addressed. So I just wanted to give a bit of a top-level review today. And of course, because my information is included here, don't hesitate to reach out with any other follow-on questions I could provide answers to. But I'd like to talk first about, what a cost submission is, and who would actually be required to prepare one, because sometimes people don't even know that they have that requirement. In the contract clauses that come with your award, it doesn't have glitter or highlights or anything on it to tell you that, hey, focus here, this is something you need to know to do. And by the way, if you don't do it, prior to not doing one, you won't get a letter saying, hey, you need to do this. You'll only get that delinquency letter should you not. And then also, how do you go about completing it? An incurred cost submission, while it is just a once-a-year look, it is more easily completed and more easily complied to if your day in, day out accounting practices, your monthly accounting practices, and your yearly accounting practices lend itself to government contracting best practices and standards. And then I just want to talk a little bit about kind of what you can expect once you actually submit it, and what this means. So please, as Doug Holly mentioned, please raise any questions that you have at any time. I really do so much better with ongoing dialogue. Otherwise, I probably will just talk you to death, and anyone that knows me will probably agree to that as well. So we're just going to take a slight poll here. Wanted to see how many people so far have ever had to submit an incurred cost submission. I also know we have a couple of service providers on the line as well, and just curious if they've ever had to prepare one, maybe not for themselves, but for someone else.
Okay.
So we'll just give it a moment.
Looks like it's pretty evenly split.
Ah, awesome. 50-50 would suggest even. Yes, definitely very easy. Very even there. Well, thank you for your candor in your results. So let's talk a little bit about what an incurred cost submission is. And essentially, at the end of each year, you're going to reconcile the actual cost that you incurred to the cost that you billed. And the way you go about doing that is scheduling out all of your actual costs, doing a final calculation of what your indirect costs and indirect rates are, and applying those rates to your actual costs to come up with what the actual costs were that you incurred. Now, when you are sitting here at January 1 of a year and you submit what your provisional billing rates will be, nobody has a crystal ball that can say, my billing rates will be this at the end of the year. But you do budget, and you do come up with what you think your cost for the year will be, and you'll come up with what you think that that indirect rate is that you should bill on a yearly basis as you bill to the government your actual direct costs. When you prepare your incurred cost submission, you're computing what that actual indirect rate is based upon your year's expenses. And then that's why this is a reconciliation between what you've booked and what you've billed. Okay? Now, understand that this is not something, and we will talk about this in a little bit, but this is not something that you want to do just once a year. You don't want to do that, because if you are billing at one set of provisional bill rates, but your actual rates are significantly different, you may wind up creating a cash flow problem for yourself, because, well, your actual rates are significantly higher than what you're able to bill through to the government. And it's going to be some time before you can actually do that true up. And you also don't want to be underrunning your actual rate significantly, because then otherwise you're going to owe a lot of money back to the government at the end of the year. So that's why you want to do this reconciliation and keep it in mind throughout the year. So who has to submit an incurred cost submission? I mean, you may be very innocently sitting in your seat right now thinking, I just had nothing to do for this hour, so I'm going to come listen to this presentation, not realizing that inside your file drawer is a contract, and in that contract there is this allowable cost and payments clause, 52.216-7. If your contract includes that clause, then you are required to submit an incurred cost submission unless you get approval from your contracting officer not to submit it. So generally, this clause is found in cost type contracts. So in all types of cost type contracts, in cost plus fixed fee, cost plus incentive, or cost plus award fee contracts, you will find this clause. You may or you may not find it inside your time and materials contracts. Understand that in a time and materials contract, you are billing your time at a pre-designated bill rate that no matter what your actual costs are or aren't, that is all you will be able to bill for a person's time. But you may also be billing materials, you may be billing travel, you may be billing other types of other direct costs. If you are billing through non-labor costs on a time and materials contract, and you are burdening those costs when you bill with, let's say, G&A or material handling rate, well, then you may be required to submit an incurred cost submission So you can true your actual indirect rate or your material handling rate, or also known as your G&A rate. You can true that up to what your actual rates are and either bill the government for the difference or write them a check for if you've overbilled. Is everybody sitting at their desk right now pulling out their contracts and looking to see if they have this clause? I'm just curious. So you may be saying, all right, I just realized now, it's going to be a long summer. I do have that clause in my contract. What am I going to do? Well, basically, there are on DCAA's website, and that's listed here, dcaa.mil, there is a, it's called the ICE model, Incurred Cost Electronic Model, that they had there. You can download, and all the schedules are on there. And what you're going to find when you look at it, that there are about 26, I think it's 26 required schedules. And, you know, don't get worried. I'm going to just tell you, out of the 26, there's really only 2 that are super time consuming. The other 24 are self-referenced and everything else to all the other ones, and can be done relatively easily. Then there's a list of optional schedules. Now, one of the optional schedules, to give you an example why you may not want to submit it with your incurred cost submission, let's say that you have 15 contracts, okay, that you're presenting on your incurred cost submission. One of the optional schedules is to complete a contract brief. And a contract brief is like a 4 or 5 page document per contract that asks you a series of questions about your contract, including clauses, modifications, you know, a variety of different things. Very time consuming to complete. So you may say, available at time of audit. So if they really want to see that brief, that they're going to come at the audit and then they'll ask for it at that time, you can either provide them with the contract or prepare the brief for that contract. Now keep in mind, because you are submitting an incurred cost submission, and let's say it does get audited, you have to remember that it's going to be audited either by DCAA, the Defense Contract Audit Agency, or by DCMA, the Defense Contract Management Agency. That being said, they are being hired by another agency to perform this audit. You may have a portfolio of contracts that are from a variety of different agencies. That being said, they're really not interested in anything but the one contract that they are, or 2 contracts or 3 contracts that are underneath the agency that is commissioning them to come perform this audit. So if I'm looking at 15 contracts that I have to fill out a 5 page document of briefs, I'm going to wait till they come to audit, and then I'm only going to prepare the briefs for the contracts that they're interested in, okay? So you don't have to do the optional schedules when you submit. You can wait until you're audited or until they reach out to you and ask you, and you can then determine exactly which contracts are triggering this audit, which ones they're going to be looking at, which ones you may need to provide this information for.
Excuse me, what schedule is that you're talking about exactly?
It's called contract brief, is the specific one I'm talking about. But there's a handful of optional schedules that the cost submission, if you look in the ICE model, the cost submission will list for you, and it separates out the required versus the optional.
Okay, I just want to, okay, thank you.
Yeah. So you can prepare the submission internally if you've not prepared it before. There's plenty of people externally that will help you with that. I can help with that. There's plenty of other great firms out there that can do that work for you. We also do a fair amount of review. Clients will prepare it, but ask us to review it for them just to make sure that, you know, they haven't forgotten something. All right. So let's talk about the daily, what are things you can do on a daily basis to make sure that when it comes to the end of the year, preparing this incurred cost submission isn't like cramming for a calculus exam when you're a senior in college, that this actually, you have a soft landing in actually preparing it. And the first thing you can do is to have a chart of accounts that is government contract friendly. So in this chart of accounts, it's going to segregate out your direct and your indirect costs. So you're not going to have, let's say, one labor account in your chart of accounts, and the cost associated with your contracts gets recorded there, as well as the costs associated with your indirect labor, your G&A labor, your overhead labor, fringe labor. You're going to actually have a chart of accounts that's going to break those out. And you're going to break them out maybe or maybe not based on the label you're going to give them, but you're going to use a number. So you may say all my account numbers are 4-digit in series, and all the ones that begin with 1 are assets, 2 are liabilities, 3 is equity. My accounts start with 4 are revenue, 5 is direct cost, and then you get into your indirect pools, and depending upon what type of indirect pools you have, let's say you just have a 3-tier indirect rate structure of fringe, overhead, and G&A. Maybe your 6s are your fringe accounts, your 7 series is overhead, 8 series is G&A. And while this is not a standard, it's kind of like an unwritten kind of known thing in government contracting, that accounts begin with 9 are the unallowables. I guess it's kind of like, all 6s for the devil. Accounts begin with 9, all unallowable. So again, not a written rule, but generally anyone that's familiar with the industry that looks at your chart of accounts will ask that question. So in addition to segregating out the accounts, when you create your indirect costs, you want to make sure that you group your costs into what's known as homogeneous pools. What that means is that you lump all your employee-related costs into one pool or your fringe pool. You group all your programmatic costs that you can't bill direct into your overhead pool. And you bill all your G&A costs, your infrastructure, your building blocks of your organization into a G&A pool. But you don't mix them, because if you do, then you wind up allocating indirect costs to direct costs on a basis that may or may not really make a lot of sense. So you want to make sure that you have your pools set up so that they're very succinct, very easily identifiable, and only relate to one thing at a time. The other thing you can do is start to understand FAR Part 31. It is a great sedative at night when you cannot sleep, is to just pull up the FAR Part 31 and start reading. I will tell you that it is not exactly entertaining, and while this may sound strange, DCAA has an audit manual where they actually, in layman's terms, explain FAR Part 31. So if you're reading it, and quite honestly, it's not really that technical, but if you're reading it and you don't understand it and you think it's probably something important that you want to do, you do a quick Google search under DCMA's or DCAA's audit manual, you will get a more thorough explanation of what the part is trying to tell you. I'll also tell you something that, as long as you don't share it with anybody but those on this meeting, the FAR is listed, Part 31 is alphabetical, and it took me about a year to figure that out. So, no judgment to anyone else as they start to learn the FAR. I understand. The only problem is, of course, is that you have to know what you're looking for. So if I'm looking to look up allowability of legal fees, I'm going to look under L in the part for legal fees, but actually it's listed under P for professional services. So again, it just takes some time. You want to make sure that you're going to record your costs in the general ledger based on those principles. And the big thing you want to make sure of is in your incurred cost submission is that there are costs that are expressly unallowed. Those are the ones listed in FAR Part 31 that says you absolutely will not include alcohol and certain types of business expenses in your indirect rate calculations, versus others that are not listed as expressly unallowable, as we're going to use reasonableness to determine this. And reasonableness is something that when the auditor comes out and tells you it's unallowable, you can then have your discussion about, and you can debate over really what you think is reasonable and what you isn't, which one isn't, and then you guys decide. Should you include something in your indirect rates and you submit it with your cost submission, which, by the way, Schedule N as in Nancy has a certification that you will sign prior to submitting that says, I did not submit anything that has an expressly unallowed cost. Doesn't say Doesn't say one that's not listed as expressly unallowed, just none that are expressly listed as unallowed. If it is included, penalties can be 100% of that cost. If the following year you continue to include that cost, even after you know you shouldn't, the penalty is 200%. The year after, 300%. You can tell this gets costly if you don't listen. So the reality of it is that there are those that are quite glaring in Part 31 you want to make sure not to include. You want to make sure, just like with the IRS, that you have proper documentation. When you're audited, they're going to come out, they're going to give you a sample of expenses they want to see. You're going to have to pull them, and then they're going to look for the documentation. So just like, for example, business meals, the IRS wants to see, you know, your receipt of who you went with and how many people were there, and et cetera, et cetera. Well, DCAA is very similar. They want to know the same information, but they also want to make sure there's no alcohol on the bill. So if you are going out as a company, you surely can spend money on alcohol, but you're going to charge it to one of those GL accounts that begins with a 9. And sometimes people even get separate receipts when they go out to eat when alcohol is involved. One for the food, which would be allowable, and one for the booze, which wouldn't. You want to use an accounting system that can accommodate these things. So, you know, I have worked with clients that have started out on Excel spreadsheets. Well, they have a chart of accounts that meets the criteria I talked about, so that's fine. You can configure QuickBooks to do this. We are Uninet partners, and we use Uninet for all of our clients that we do outsourcing for, and that is an accounting system that's very GovCon friendly. There are no accounting systems that you'll go out there and buy that if they tell you that this is an approved accounting system, you need to buy it. That is not true. An approved accounting system is a combination of how you have the accounting system configured and the policies and procedures that are within your accounting manual that you follow. So, you know, when you are looking to get a GovCon compliant system, keep in mind that anybody that has that, it is purely marketing, and it truly is not true. Now, the other thing I find...
Here, just a quick question. So
yeah.
If you have a system, is there a boilerplate policy manual you can get that kind of gets you 90% of the way there?
I'm sure there are firms out there that will sell that. There are firms out there that'll sell that. I think that, excuse me, I believe that, it doesn't want to come, I'm sorry. I believe that there are firms out there that'll sell that to you. You can also, you know, really, if you look in the audit manuals, as I said, the DCAA audit manual, they have certain things in there that you can craft that with to get you there. We actually have a policy manual. We don't sell it to our clients in boilerplate format. What we do is we use that template to kind of cut out some of the upfront hours associated with it, so we don't have to bill our clients that, and we work with them to customize it.
Okay, thanks.
The other thing I'll tell you about government contract accounting is that because your indirect rates are a yearly look, you'll be using an accrual basis of accounting. So you'll recognize expenses in the period in which they relate to, not necessarily the period in which they're paid. So when we work with some of our clients, especially some of the smaller guys, of course, we are all tax focused because ultimately that's what we want to know. What are we going to owe at the end of the year? But for purposes of computing your indirect rates and applying them to the direct costs for preparing your incurred cost submission, all this is done on the accrual basis of accounting. So on a monthly basis, what can you be doing? Well, you can reconcile your general ledger to your job cost ledger. So if anybody is sitting there saying, what is a job cost ledger? Let me tell you what it is. It is a mini income statement for each one of your projects. So understand that the general ledger or the regular income statement, it's the sum of the pieces. And the pieces are your individual income statements, you know, or QuickBooks calls it a profit and loss by job. Deltek calls it a PSR. Uninet calls it a J, whatever you want to call it. At the end of the day, it's your mini project income statement. You want to make sure that your general ledger and your job cost ledger are in sync. You want to reconcile your balance sheet. It is important because there could be hidden costs in there that maybe you didn't amortize all your prepaids, and now your indirect rates are too low because they're sitting in the asset side of the balance sheet instead of in the expense. And you want to review your income statement to make sure, it looks adequate. So as you're looking through it, maybe you review the trends. You can pick out things that maybe don't look right, look like anomalies. Make sure this all makes sense to you, because if it doesn't, then your indirect rates aren't going to make any sense. So what are some of the annual things you can do? Well, now we've done a ton of daily and monthly procedures such that our annual look should just be a walk in the park, right? No problem. We're going to make a very soft landing for ourselves. But we're going to just do a reflection, and we're going to say, let's look at all of our accounts, make sure we've done a good job of reconciling them. Some people may be familiar with the term soft close versus, hard close. Maybe we do a soft close each month where we're just kind of saying, yeah, looks about right. I've got my cash reconciled in the major accounts. But on a quarterly or annual basis, we make sure we do that hard close, make sure everything is tied up and nice and tight. We make sure we have good supporting documentation. I get a lot of clients that say, oh, if I need that, it's on American Express's website. Audits sometimes don't happen within 6 months of the end of a year. It's not uncommon. We could be going back 5 years. The technology American Express used then is very different, and they've purged all your receipts. So, just make sure you have what you need. And then really what you want to do in the second half of the quarter of the last year, sometime if your fiscal year is December, you just want to measure your indirect rates and see if you're on target. So just keep in mind, we talked initially about this crystal ball that we all, don't have, and how we're projecting what we think our rates are going to be at the end of the year. Let's take a look in mid-November and let's see how close or how far apart we are if we haven't been doing it throughout the year. Because then we have 6 weeks to affect the change, whatever that needs to be. Does our fringe need to be higher? Do we need to cut spending? Do we have extra money that now we can make investments in the end of the year? Because I don't want to give money back to the government. I want to, make investments because I have this extra money this year to do so. So I used to have a boss that said, what gets measured gets done. And this is absolutely the case where that would apply. So what are the important dates for our cost submission? Again, we discussed that we're doing this now because June 30 is the majority of most contractors' due date because they're on a calendar year. But technically, it's 6 months after the close of your fiscal year. So if you're a September year end, then it's March. If you're, June, then it's September, whatever it is, you've got 6 months. Now, if within 6 months of the deadline, so if I'm a calendar year, I'm due June 30, but I don't submit it, let's say I get to 12/31 of that next year and I still haven't submitted, DCAA can unilaterally determine your indirect rates, which is something you absolutely don't want because they're not going to be generous. They are going to either give you the bill rate that you have been billing all year long, that crystal ball look that you projected and told them you'd bill at, or they're going to do something worse. So you don't really want to make them mad. And then I'll also just mention that doing something like not submitting kind of puts you on a naughty list that nobody likes to be on. So make sure you submit on time. You've got 6 months within the 6 months. Once you submit your submission, what you can expect is that within 60 days, they're going to do an assessment, and that assessment is going to determine if your submission is adequate. So, do we have all those required schedules that they asked for? Were there optional schedules that maybe this agency wants to see? Well, but we just haven't, we just haven't included, and it's okay. Are we missing any data, or any of our schedules unreconcilable, such that they just couldn't even do an audit even if they were ready to start? So DCAA actually has timelines now, which is something that's new within the past few years, where they have to prepare, once they receive a submission, they really have 60 days by which to get back to you. So you will hear stories of people saying, oh, I'm 5 years behind on my submission. They really have gotten very caught up, and they're pretty current on getting things done. Their goal is to finalize your rates within 1 year of when the submission. So technically speaking, if we're sitting here January 1, 2020, we could be looking at finalized rates June 30, 2021. I mean, technically that's kind of how it works. What I will tell you is that they also, when they come out to do the audit, they will do a risk assessment. So the first year or years, depending upon how many they're doing at first, they will do a very thorough check. They will pull 1,000 samples. They will ask a ton of questions. They will interview you. They will look at bills. They will do walkthroughs of your processes. They will not leave there without a very full understanding of exactly how your system works. But if you pass with flying colors, then you may get assessed as a low audit risk. And as such, in future years or for a period of time, I don't exactly know what that is. One of my clients is on year 5 of this. We keep like crossing our fingers as we're getting ready to submit this year's that like we're still on that list. But he may be up for, full audit again. But they will do more of a desktop review. So you won't even see an auditor come out. Maybe they'll send you a question or two. But if you get assessed low risk, you can be, rest assured that in the future years, or at least for a period of time, you will have a much easier way of getting your rates approved. So once you actually have those rates approved, you're ready to prepare your rate variance billings. And essentially, as we discussed, this is taking whatever it is that we have previously invoiced for a given year, and we're going to compare that against what we should have invoiced had we had a very clear crystal ball and knew what our actual rates were going to be at the end of the year. And the difference between the two is either what you're going to invoice for the government to pay you, or unfortunately, sometimes you owe them money back. So again, this is why you want to manage your rates throughout the year, whether you have an Excel spreadsheet that can do that, whether you have an accounting system that can do that, or whether you just call your accountant to do it for you. You want to make sure that you have an idea throughout the year of where your rates are, because you don't want to wind up with a large delta. In addition to the cash management issues it could create, it also kind of doesn't set a great tone with DCAA. So if you're trying to, or more so with your contracting officer, because keep in mind they have allotted you a level of funds for the year. And if you go back to them and say, I really didn't need most of this, well, now those are funds they could have allotted someplace else. So they're not really going to be happy with you. If you go back to them and you say, I've overspent my rates, unlikely you're going to get a modification, quite honestly, if you're out of funding, and then you wind up eating it. So it's this rate management piece is really important to do, again, not just at the end of the year, but throughout the year. But again, expect that you're going to have a rate variance invoice, because nobody knows. Nobody knows really January 1 what we know at 12/31. Okay.
Yes, I got a couple questions on that. So
Yeah.
do you do that on an annual basis, or do you do it when claims are closed because of the accrual process and things like that, and when you get paid? Because I know at the end of the year, I usually have something that's off, but it's usually because of the accrual process and because the claim's not closed yet.
Do you mean send in the rate variance invoice?
Yes.
Okay. So the rules would say that you wait until your cost submission is finalized and approved by DCAA or whoever's auditing you to submit your bill, right? I have several clients that the contracting officers allow them, once they have their rates finished for the year, they've closed out the books and these are the rates they're going to submit to DCAA, they allow them to do a rate variance invoice at that time. So it's really up to the contracting officer if they'll allow you to do it before or after audit, or what after audit is known as your rates are settled.
Right.
If they allow you to do it and then maybe there is a minor adjustment at audit, you could do another rate variance invoice or just wait till close out. contract closeout to bill or get the money, depending on the amount.
Okay, thank you.
Any other questions? Okay, so here's just a couple of frequently asked questions, but keep in mind, I'm just asking myself questions, waiting for you guys to ask me some. So I like yours better than mine. If you have any, don't be afraid to send one out. Do I have to use the ICE model? And no, you don't. It's out there as a format to use. It has some guidelines with it. The one thing I'll tell you about the model, while I think it is very good, and it is where I got my start when I started doing cost submissions many years ago, it tells you what to put into the fields, but it doesn't tell you why you're doing it. And to me, I just like to know why I'm doing it. So while I think it's a good first pass, if you have any questions about it, you can research it through the audit manual. You can shoot me an email. Happy to help you out with it. But no, you don't need to use their format. But they would like it in an electronic format, so Excel is preferred. When you submit your submission, generally they ask you for the Excel version, and they want to see your formulas. They want to see how the cells are referencing one another, and they want to know where you got your data from. So don't hard code everything before sending it over. Can DCAA grant an extension for submitting the cost submission? So, look, things happen, right? Maybe you're just not going to be ready 6 months after. I don't know. You're doing a system conversion. You had staff leave. You've just wanted, something has happened that's gotten in the way of making the 6 months possible. So DCAA cannot grant that, but your contracting, your administrative contracting, your ACO can grant that. I'm going to tell you, they generally don't. I've submitted for extensions. I've never once gotten one approved. And I've come up with some really good stories too, but they generally will not approve it. Keep in mind, again, you've got 6 months after the deadline. Not that I suggest you use it, but you have 6 months after the deadline before they can unilaterally determine it. So if you think you're just going to be a month, or a couple weeks behind in submitting, they tell you no, don't worry about it. Just submit it as you have it. If you have a change to your submission and they haven't yet audited it, you have the ability to submit a revised one up until the time they start audit. So we recently had one from 2018, and the company just finished their financial statement audit, and they had a couple of journal entries that were made. We were able to go in and just submit a new submission, because ultimately they don't want to get started on something that isn't final, right? They don't want to be making adjustments. So you can still submit even after you've submitted.
Hey, Kathy, I'm like, what do you think about in the COVID world, that maybe someone's accounting staff was decimated by people who had COVID. They're healthy now, but that's kind of thrown them behind. Do you think that might be an area that some of these contracting officers would be more lenient towards?
I don't see how they'd have a choice, right? I mean, they probably may or may not even be able to work, even if you submitted. They may give you an extension, but again, you still have that 6 months to use. I think that the guidance isn't clear on that. I think where I've seen some of what the contracting officers in other areas of contracts are able to do are so much more lenient and contractor friendly that I could see this also being a theme, that they would grant it.
Okay. And then also, as far as government contractors and these PPP loans, a lot of government contractors have received PPP loans. And of course, Congress's intention was to allow the loans to be forgiven and still deduct the expenses. The IRS came back and said, no, that's, unless Congress changes it, tells us otherwise, you cannot deduct the expenses if the loan's forgiven. But forgetting what the IRS is doing or what Congress says, what is DCAA going to do with those expenses used for PPP money and then the loan is forgiven?
So I don't know the exact answer to this, but based on behaviors that I've seen and themes from other types of costs. So when you have a cost, and actually in FAR Part 31, it does talk about this, when you have a cost that's reimbursed, while I realize for tax purposes, you would show it the reimbursement as revenue and the expenses expense. If you're reimbursed for a cost, you would deduct that reimbursement from the expense. So it decreases the expense. Therefore, it wouldn't go into your indirect rates. If the government pays you through the PPP loan for the expense, well, then they also wouldn't pay you through cost recovery of your indirect rates if it included it in there. So where I think, based upon the behaviors I've seen with other cost treatments, where I think it will go is that it will not be, those costs will not be allowable expenses in your indirect rates.
Okay, well, that makes sense. Is there, for planning purposes, would you rather have the PPP pay direct labor or indirect labor?
Well, I think firstly, it depends on the type of contracts you have in the mix. So, I don't think you can pick, can you? Can you say like, for this period, I'm only going to pay direct and not the indirect, or?
Well, generally no, but now with Congress, as long as the president signs the bill, Congress is extending the PPP from 8 weeks to 24 weeks.
Mm-hmm.
So it'll be much easier for people to qualify for the loan forgiveness. And so you may be able to pick in this case if you want the forgiveness on direct labor or indirect labor. So it's just a thought. There may not be an answer. I don't know, but I was just curious for that.
I think you'd have to take a look at where your rates are falling. The direct labor is going to get reimbursed through billings anyway. There are certain thresholds, I believe, within the PPP, and I know you're much more well-versed on this than I am. How do you deal with the contractor that is still having their direct labor and indirect costs reimbursed, but has a PPP loan, right?
Right.
So you're definitely not going to triple dip through your indirect, rate recovery.
So then all the more reason in that last quarter of your calendar or fiscal year to do some rate planning.
Definitely. And if you're a contractor that has a variety of different contract types, like cost type, time and materials and fixed price, and maybe the majority of your work is not in cost, but rather in those other two vehicles, if you're underrunning your rates, maybe you're okay with that, because by underrunning them, you're making more money on the other types of contracts since they're fixed and you're not going to have to give any money back on those, than the amount of money you'd have to give back on your costs. So you have to think about your contract mix when you're doing your indirect rate management and determining, I'm okay with underbilling or I'm okay with overbilling. There's not necessarily a standard answer.
Okay.
So when you mentioned the contract mix there, you mentioned different government contracts. What about commercial contracts?
Yeah, all the same, I would say. And with those, with commercial contracts, you're never going to give money back, right? So
Right.
You give them a price and that's it. So you could put those under the heading of fixed price very easily, or even T&M, or maybe you just put it in the fact of cost reimbursable or not. And, you just look and see, by underrunning my rates, I thought I'd have a 2.0 multiplier. That's what I bid my rate at. I'm really coming in at 1.7. Well, that 0.3 differential, I'm making, more, because I have more T&M, more commercial, more fixed price than I do cost. That if I have to write the government back a check for the underrun, it's only 10% of my business. I don't care. I'd rather do that.
Thank you.
Yeah, but managing the indirect rates, I kind of joked about it, but it's true. You don't want to be cramming for this at the end of the year. You really want to be managing it throughout the year and affecting change where you need to. Because there is a level, I mean, there's certain things you can't change, but there are things you can. So, you know, you just want to manage your costs appropriately.
Got it.
So, any other questions today?
No, I don't see any others, and I think we're getting close to being out of time.
Okay. Well, I really do appreciate everybody's time today. It's great talking to you, and I appreciate the questions. Please feel free to reach out to me if anything else comes to mind. I really enjoy getting emails. I don't bill for them because, well, it just keeps me out of trouble with something to do, responding to emails instead of something else I could do. So please don't hesitate to ever reach out if there's something that you need.
Well, thank you very much, Kathy. It was a very informative program, and we certainly appreciate you taking the time to put it together and to offer it to us. And if there are questions, please feel free to send them in. And I would like to thank also Doug White and Austin Abell from Glass Jacobson for hosting the series and putting these programs and others together. In 2 weeks, we have another program where we'll be talking about securing your PPP funding and making sure that doing the steps that you need to do, filling out the paperwork correctly so that you can turn it into a grant. I think that's right, Doug. Am I saying that correctly?
That is correct. We're going to be concentrating on the loan forgiveness. And, you know, we were planning to do it based on the SBA's forms that came out for loan forgiveness and its instructions, which of course have been totally thrown out, well, not totally, but substantially thrown out the window with HR 7010 and the Senate passing that by unanimous consent. I'm sure the president will have signed it. We may not have new SBA forms at that time, but we will be able to use the SBA forms that are out that they'll just change by date substantially. At least some of the forms you have to fill out will be okay. And so we'll kind of go over that so that you can figure out how much of your PPP loan will be forgiven. And of course, as we just mentioned in one of the questions to Kathy, now that you have 24 weeks, it might make it a little bit easier for everybody. So anyway, but even though the expenses might be easier, you still have issues with full-time equivalents and what you're paying people. So you may use all the money on the PPP now, but depending on a couple of tests, it still may not be all forgiven. So there's still planning that you have to do. So we'll do that on the 18th, correct, Doug?
That's correct. 18th.
And then, you know, if you have any ideas for something that you'd like to see in a webinar, please let us know. You can email myself or Austin or email Doug Hawley. We're also hoping, you know, we're planning a couple of programs, you know, throughout the year where hopefully Kathy will agree to come back, because there are a lot of topics for government contractors that people should be aware of. So we hope to have Kathy back as well. So any ideas you have for programs, please let us know. We would love to entertain those and kind of go forward. Just like Micro does with Dirty Jobs, we need your help to come up with the ideas that you want to talk about.
Awesome.
Well, thank you, Kathy, and thank you, Doug. And we appreciate everybody joining us again and look forward to seeing you in a future event.
Thank you so much. You all have a wonderful day.
Bye, everybody.
Thanks,
Thank
everybody.
you.